Problem 21-53, sales mix and how to calculate break-even point for two products. So, problem 21-53, the contribution margin income statement of Crazy Custard Donuts for August 2016 follows. Now, this is contribution margin income statement for August 2016. Here is the sales revenue, then variable cost. We have three items, and this is for the total variable cost. Sales less variable cost equals contribution margin less fixed cost. So here we have two items, and the total fixed cost is 43,200. Now contribution margin less fixed cost equals operating income. Crazy Custard sells 4 dozen plain donuts for every dozen custard filled donuts. So as you can see, the ratio, it's not 1-to-1. I sell 4 dozen of plain donuts for each 1 dozen of custard filled. So this is the sales mix. Okay, now a dozen plain donuts sells for $4 with total variable cost of $1.6 per dozen. So again, it's per dozen, it's not total variable cost, it's per dozen. But he said total variable cost because as you can see we have 3 items, so he computed the total variable cost per dozen. A dozen custard filled donuts sells for $8 with total variable cost of $3.2 per dozen. So he gave you the sales price and the variable cost per dozen for each product. Okay, so I need to write them down first. So now I wrote down the sales mix. It's 4-to-1, 4 dozens plain for each dozen custard filled. Then he gave you the sales price and the variable cost for the plain and for the custard filled. So I wrote them down. Now I can find the contribution margin per dozen. So how can I find that? Okay, it's sales price less variable cost. So you're gonna get the contribution margin per dozen. 4 minus 1.6, you're gonna get $2.4 per dozen. 8 less 3.2, it's gonna be 4.8. Okay, so let's read the requirements. Requirement number 1, he is asking for the weighted average contribution margin. Weighted average contribution margin. So now we calculated the contribution margin per dozen for each product. How can I find the weighted average? You will tell me to add these up, then divide by 2 because we have 2 products. But it's not gonna be correct. Why? Because if I divide by 2, it means the ratio here, it's 1-to-1. So the total will be 2. Okay? So again, if the ratio is 1-to-1, I can divide by 2. But here, it's not 1-to-1, it's 4-to-1. So I need to divide by 5. First, I need to multiply with the sales mix. I need to consider the sales mix in my calculation. Because this is the 2.4, it's per dozen. I need to find it for 4 dozens. So I need to multiply it with 4. And for the custard filled, I need to multiply it with 1. Again, this is the sales mix. It's given here. 4 dozen plain for every dozen custard filled. Now, after we multiply it with the sales mix, I need to find the new contribution margin. 2.4 times 4, it's going to be 9.6. And 4.8 times 1, it's going to be 4.8. So now I can add the new contribution margin. So 9.6 plus 4.8, it's gonna be 14.8. 0.14. Now we divide it by 5 because it's 5 dozens, not only 2. So the weighted average will be 14.4 divided by 5. This is the first requirement. So 14.4 divided by 5, it's going to be 2.88. Now in requirement number 2, he's going to ask you to find break-even point in dozens. Okay, so as you know, the formula for the break-even point in dozens or in units, it's going to be total fixed cost plus profit divided by contribution margin per dozen. Okay, now the total fixed cost, as you can see here, I'm going to take this number because I need the total fixed cost, which is 43,200. The profit at the break-even, it's going to be 0, as you know, divided by contribution margin per dozen. Okay, since I have 2 products, okay, I cannot take contribution margin per dozen for the plain nor for the custard filled. I need to find the average, which is this one. So when you have sales mix or when you have 2 products, to find the break-even point in dozens, you need to divide by the weighted average contribution margin, not the contribution margin per dozen. So again, the formula will be total fixed cost plus profit divided by contribution margin per dozen. Since we have 2 products, it's gonna be weighted average contribution margin, and the profit will be 0 at the break-even point. So the total fixed cost from the contribution margin income statement for month of August, it's gonna be 43,200 plus 0 divided by the weighted average contribution margin, which is 2.88 from requirement number 1. So the answer will be 15,000 dozens. Now again, the sales mix was 4:1. Okay, 4 dozens plain for every dozen of custard filled. So to find how many of the 15,000 dozens were plain and how many custard filled, I'm gonna use the proportion. So I'm gonna multiply the 15,000 dozens by 4 divided by 5, then I need to multiply it again with 1 divided by 5. Again, the ratio it's 4:1 and the total is 5. So for the plain, I need to multiply it by 4 divided by the total. For the custard filled, I need to multiply it by 1 and divide it by the total, which is 5. So 12,000 dozens of plain and 3,000 dozens of custard filled. Now, which means if I sell 12,000 dozens of plain and 3,000 dozens of custard filled, I'm gonna break even. Okay, so if you read this requirement, he's saying prove your answer by preparing a summary contribution margin income statement at the break-even level of sales, which is this one. This is the break-even level of sales. Okay, show only 2 categories of costs, variable and fixed. Okay, so we need to prepare a summary contribution margin income statement at the break-even level of sales. Okay, how can we prepare this one? So it's gonna be sales less variable cost equals contribution margin less fixed cost equals operating income. So we said the break-even level will be when we sell 12,000 dozens of plain and 3,000 dozens of custard filled. So I need to prepare a summary contribution margin income statement in which I need to write sales, then less variable cost equals contribution margin, less fixed cost equals operating income. Now for the plain, I need to multiply 12,000 dozens by the sales price per unit. And for the variable cost, I'm gonna do the same, 12,000 dozens by the variable cost per dozen. So the contribution margin will be 12,000 dozens multiplied by the contribution margin per dozen. So the sales price for the plain, it was $4 per dozen. The variable cost was 1.6 per dozen, and the contribution margin will be 4 less 1.6, so it's gonna be 2.4. Okay, I'm gonna do the same thing for the custard filled. I need to multiply 3,000 dozens by the sales price per dozen, then 3,000 dozens by the variable cost per dozen, and for the contribution margin I need to multiply 3,000 by the contribution margin per dozen. So here the sales price was 8, the variable cost per dozen was 3.2, so the contribution margin will be 8 less 3.2, so it's gonna be 4.8. Now let's do our calculation. Okay, if I multiply 12,000 by $4, it's gonna be $48,000. 3,000 times 8, it's gonna be $24,000. 12,000 times 1.6, it's gonna be 19,200. 3,000 times 3.2, it's gonna be 9,600. Now 48,000 less 19,200, it's gonna be 28,800. 24,000 less 9,600, it's gonna be 14,400. Okay, now I need to create a column for the total. Okay, so 48 plus 24, the total sales would be $72,000. The variable cost as total will be 19,200 plus 9,600, it's gonna be 28,800. Now sales less variable cost, which is 28,800, it's gonna be 43,200. Okay, now for the fixed cost, again the total fixed cost was 43,200. If you go back to the August contribution margin income statement, the total fixed cost was 43,200. So now 43,200 contribution margin less 43,200 fixed cost, you're gonna get 0. So this is the proof that if I sell 12,000 dozens of plain and 3,000 dozens of custard filled, I'm gonna break even, which means your income will be 0. Okay. Now let's see requirement number 3. He is asking for the margin of safety in dollars for month of August. Okay, so the formula will be expected sales for month of August, okay, less break-even sales. Again, since he's asking for dollars, so you need to find the break-even sales in dollars. Now, expected sales in August, you need to go back to the question and you need to check what was the sales in August. As you can see, sales in August was $125,000. So expected sales for August is $125,000 less break-even sales in dollars. Break-even sales in dollars, again, this is the break-even. Okay, so break-even sales in dollars was $72,000. As you can see, it's here. $72,000. So 125 less 72, it's gonna be $53,000. This is margin of safety in dollars. Thank you for watching. If you have any question, please leave a comment. Please like, share, and subscribe.